value or growth stocks, which should you invest in? Growth stocks are shares in firms that investors believe will grow at a faster rate than the market as a whole. Value stocks are those that are trading at a discount to their intrinsic value and are expected to deliver a higher rate of return. Which group do you think is superior and you should invest in? What do history and previous results and data show? Let's find out in today's video, so watch this one until the very end. Stockholders of both growth stocks and value firms can indeed profit handsomely from their holdings. Your individual financial goals and investing preferences are major factors in determining your right investment strategy. You may find growth stocks more tempting if you don't care about your portfolio's present income. Most fast-growing businesses shun the practice of dispersing a sizable portion of their earnings as dividends. That's because rather than keeping excess funds in reserve, they prefer to reinvest all of their profits back into the company, where they can help it develop even more quickly. 2. You have no problem riding out large swings in stock prices. Changes in the outlook for a company's future can dramatically affect the price of its growth stock. Growth stocks have the potential to skyrocket in value if and when things go more smoothly than predicted. Higher-priced growth stocks have the potential to plummet just as rapidly to earth should they fail to meet expectations. You have faith in your ability to identify promising new fields, which brings us to our third point. Common places to find growth stocks are in dynamic industries like the tech market. Several different types of fast-growing businesses frequently compete with one another. 4. You have a long time before you'll need that cash again. The full potential of a growth stock may not be realized for a long time, and the stock may experience several setbacks along the road. The company needs you to have a long enough perspective to allow it to expand. If you're enjoying this video, please hit the like button and subscribe to our channel if you haven't yet to show us your support. Now let's continue. If we're going to talk about value stocks, then looking for things like these could make them more appealing. You're looking for your portfolio to start making money right away. It's not uncommon for value stocks to distribute sizable dividends to their investors. Such companies must find other ways to make their stock appealing to investors without strong growth potential. One strategy to entice buyers is to offer dividends at rates that investors find appealing. The second is that you lean toward more consistent stock prices. Value stocks rarely see major price swings. Stock price volatility is typically moderate so long as their business conditions stay within reasonable bounds. The third is that you can protect yourself from value traps. Many stocks that appear to be inexpensive are actually value traps or are undervalued for a purpose. The company may have lost its advantage in the market or be unable to keep up with the rapid development of new technologies. Understanding when a company's future business prospects are weak requires looking past appealing values. One additional thing is that you need your money to start making money immediately. Turnarounds in value equities don't happen immediately. Stock prices can swiftly increase if a corporation is able to turn its business around. The most astute value investors can spot promising companies and snap up their stock before other investors realize their potential. Finally, there's no clear winner between growth and value equities in terms of long-term performance. Overall, growth equities do slightly better than value stocks when the economy is doing well. Value stocks have proven to be more resilient in times of economic turmoil. Which group does better depends heavily on the time frame in question. There is no reason why you can't hold both growth stocks and value stocks in your portfolio at the same time. Each group possesses unique features that make them appealing. You might be able to have the best of both worlds by including diverse exposure to both in your investment portfolio. It is also fine if you identify more with one kind of investing than the other regarding your financial decisions. When you've decided what you want to accomplish with your investments, you will have a clearer idea of whether you're more of a growth investor, a value investor, or a combination of the two. So that's all for today's video. Tell us in the comment section what you thought of this one, and tell us about the stocks you're planning to invest in or have already invested in. We would love to hear from you. I hope that you found this video interesting, and if you want to see more just like this, please consider subscribing to our channel, and also don't forget to give comments and provide us with your valuable feedback. We will see you in the next video with some more interesting facts and stories. And until then, stay tuned.